What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and we're going to be going over some of the retail stocks, quote-unquote meme stocks. That includes your classic GameStop, your AMC, as well as your BlackBerry, which have seen a pretty nice increase in the past week. Really nice run up, and a lot of momentum is pouring back into these retail stocks. As we can see in GameStop, this stock has been had a really big movement earlier in the week, and then it kind of remained flat the rest of the following days. So it's definitely consolidating, and it's definitely looking for a pretty big move in the upcoming days that I can see. As we can see, very tight. Very tight. This Bollinger Band range is tightening, which means it's getting ready for a nice movement, whether it's to the upside or the downside. If it's to the upside, we do need to break this resistance line of $213. So if that happens, we can see another big explosion upwards for GameStop stock. And of course, if it decides to move downwards, it doesn't really have too much support. So if it breaks below $200 per share, we're going to be looking for GameStop free falling pretty much. But overall, I do think that GameStop has a lot of bullish momentum, and we're going to be seeing GameStop possibly exploding in the market next week as a lot of retail investors start pouring in. As we can see, a lot of people are talking about GameStop. This stock is one of the most talked about stocks right now by far in the market last week. Almost 3K mentions. A lot of people are pouring their money into GameStop, and it's been staying relatively flat. This means that it's consolidating and it's getting ready to just shoot up next week if we can see another strong rally in the market. So that's what we're going to be looking for. And if you want to play the stock, it's probably better to you can either buy some call options just as a little gamble, but of course be careful because retail stocks such as AMC, GameStop, and BlackBerry, they're very high option premiums just because their implied volatility is very high, so it's very risky to buy options. But if you want, you could take advantage of some safer strategies such as credit spreads, call debit spreads, cash secured puts. But just buying naked calls, naked puts, it's very risky because you're losing tons of value every single day, especially if the stock stays flat, as we saw on last Friday. So we go to the options chain, both the calls and the puts lost over 20% of their value just because the stock stayed flat. So that's the bad thing about buying naked calls and puts. You're going to be losing a lot of value if the stock does not go your way or just remains flat. So as we can see, percent change, minus 21%, minus 23%. Let's head over to the put side, minus 20%, minus 19%, 22%. These call options and put options lost tons of value just for a flat day in the market. So that's why it's going to be very dangerous buying naked calls and puts. What you want to do is get rid of that data decay factor by turning it into a spread, whether it be a call debit spread or a put credit spread, which are both bullish positions. For this example, since premiums are pretty high, we're just going to do a put credit spread, and we're going to be selling this credit spread at a pretty far out of the money strike, just to be safe. What you want to do is probably do like a 185 strike, sell that, and then buy the strike under it, the 182.5 strike. As you can see, your total credit is going to be roughly around $70. Of course, it's going to be changing when the market opens because it's not currently reflecting accurate strike prices or accurate premiums just because the market's closed and the price has moved slightly in the after hours. So we have to wait until the market opens on Monday for correct options pricing, but this is something that we're looking to do based on what happens in the market. A 185, 182.5 strike put credit spread looks pretty good to me. And of course, if you have a bigger account, if you have enough collateral, You could just straight up sell some cash secured puts. You could sell a 180 strike cash secured put for 244 premium. Very, very high chance of profit, 83% chance. Very, very nice strategy, especially if you're bullish on GameStop or if you just want to buy stock at a lower price. Because remember, if GameStop dips below $180 at expiration, which is next week, September 3rd, you just have to own 100 shares at $180, which is a lot safer than just outright buying 100 shares, say at $230. Because if it dips below 180 and you just outright bought 100 shares at the current price, you're going to be losing a ton of money. So it's very safe to get into these stocks just by selling cash secured puts. And it's actually, in fact, Warren Buffett's #1 strategy for making money in the market. He sells cash secured puts on stocks he wants to own for the long term. And he does that by selling cash secured puts at low strike prices. He either buys stock at lower price or he wins on the trade and collects a premium and goes on to the next trade. Very, very simple option strategy like that. So AMC, similar setup as well, but it is tapering off a little bit. So you got to be careful there. But AMC does have some really nice support around the $38 price range. So that's a good opportunity to sell some cash secured puts at that strike price. And the good thing about AMC is it's at a lower stock price than GameStop, so it's better for people with slightly smaller accounts. It's still going to require a few $1,000s of collateral to put down, but you're going to be having a really nice options strategy, pretty nice, safe profit. So we can take a look at the $38 strike price right here. You're going to be collecting $156 of premium. Very, very high premium compared to GameStop. So people are anticipating a very high move with AMC, whether it be to the upside or the downside. Premiums are very high, so we can take advantage of this by selling option premiums. In this case, we're going to be selling a $38 cash secured put for $156 of premium. Very, very nice chance of profit, as well as nice premium that we're going to be collecting. 156 divided by our collateral, which is going to be 3,800, 4%, over 4% return in just 1 week. Very, very nice strategy. And if you want to own more AMC shares, this is the way to do it. So that's about it. We also have BlackBerry, which is an even cheaper stock price. If you take a look at the chart, we need to break $11.50 for it to see a really strong upwards movement. But there is a really nice support around the $10.50 range. And if you want to play options, once again, selling cash secured puts is the way to go because these stocks are volatile and you're going to collect some nice premium. As we can see, $10.05 strike, you're collecting $22 of premium. Might not seem like a lot, but that's actually a 2%, over 2% return in just 1 week. So collateral we're going to put down $1,050. If you take a look at the profit, our collateral is actually going to be a little lower than that. It's going to be your collateral minus the premium you're collecting. So our collateral is going to be $1,028. So if we do 22 credit divided by 1,028, that's going to be over a 2% return in just 1 week. So very, very nice strategy, very, very nice chance of profit on these strategies. And the best thing is BlackBerry is sitting at a very cheap price, so it doesn't require that much collateral. Perfect for small accounts to grow their accounts and just make some really nice, consistent and high profitability trades to grow their accounts. That's about it for this video. If it helped you in any way, please leave a like, comment down below your thoughts on BlackBerry, GameStop, and AMC, and of course subscribe to the channel if you're new here. It helps out a lot. Thanks for watching.